we could talk about Apple's earnings coming up. I think that's today. Is that today after the market close?
Yeah, it is. All right,
All right,
perfect. So
let's
let's
do
go.
that. Okay, uh, let me share my screen here. So let's go to Apple. And with Apple coming up with earnings today after the market close, what we could do is take a look at some of our reports to see if we could get insights about what Apple typically does um, around earnings. What do the options look like around earnings? And then we could compare it to what's going on right now. So on this interactive charts, we have a couple summary statistics for Apple's earnings. The top one over here looks at the implied earnings moves that's derived from option prices. So historically, if we looked at the straddle at the end of the day, right before Apple announces earnings, the average straddle implied a move of 4.6% up or down. Okay, so let's take a look at it. I'm going to click on it, and these are the historical observations. And what we could see is that if we took the average of all of these, then on average, the straddle premium was priced at 4.6%. In other words, you buy the call, you buy the put. If the stock needs to move by a big enough percentage to cover both the price of the call and the put in either direction. The maximum, the biggest straddle premium that we registered was 6.8%. Lowest is 2.8%. And the median straddle was 4.5%. How does that compare to the most recent one? So we could see here, this one over here is a different color. And that is where the price of the straddle was as of yesterday's close. We're not open yet, but as of yesterday's close, I'm hovering over it. And the straddle was pricing in a move of 3.9%. So you could see this dotted line, that's the average of all the straddles. So we're below that now. And we still have we have a full days of trading today. Maybe, we'll see, we don't know, but it's possible that, the straddle gets bid up closer to that average, maybe not, but it's certainly so far looks like it's on the lower range of the historical range. Let's narrow this down just to second quarter. So Apple right now is going to report Q2 second quarter earnings just to see if these stats change. So I'm going to come up here and we're going to click on Q2. And now we see what the straddle premiums look like for Q2, historical Q2. We're right here. This is where we are now, 3.9%. We could see the average straddle is about 4.4%. This is the range, 5.4% to 3.5%, with a median straddle premium of 4.4. So this helps us with the following. We don't know what the straddle will go out by the end of the day. And some people, that's what their strategy is, right? They don't care about the actual earnings, but where the straddle might go out. Is it because during the day it's going to fluctuate? It could be up, it could be down, and it could have a run up, maybe not. But now we get a sense of, the historical end values of the straddle, and then we could compare it to where the straddle is priced now. So here, if we narrow it down to Q2, we could see that, there's the average is 4.4, and just eyeballing it here that we get some variance, right? It's not exactly 4.4 across the board, right? Not every time. I mean, sometimes we've got 3.5, had a 5.4, but if just looking at Q2, that range, if you're used to looking at these ranges, that it doesn't look that wide, because I'm sure if we looked at some other stocks like Meta or Netflix, I think we're going to get more variance than this. But you still have a variance, right? You could see the range here, about 2% difference, and we are closer to the lower part of that range. Let me look at all of them if we look at all the quarters going back 10 years, the range is wider, 6.8% to 2.8%. But again, we're below that median and average end value. So let's keep going. Let's keep that in our mind, right? We're looking at this data, trying to assess, what typically happens. So let's come back to the summary. Now, the next thing we could do is compare that straddle to the actual moves. Well, how did the stock actually move from, as of the close, end of day, right before earnings, to the end of day, the next day after reporting earnings, right? What was that move look like? And here, this is the absolute average move. In other words, we convert all the moves to positive moves. So if the stock was down, we're going to convert it and say that give me the move as a positive, because when you're looking at a straddle, we're looking at magnitude of the moves, and then we take the average of all those. So the average of all those is 4.2%. And if we just compare these two numbers, 4.6 versus 4.2, then the options over that longer time period tended to overestimate the actual move. The premiums on average were priced higher than the actual move, right? About 0.4% differential. So let's take a look at that. I'm going to click on this. And these are the historical moves going back to 10 years, 2014. The bars here represent the magnitude of the move, right? So you see going from 0 up, it's the magnitude of the move. The red bar means that the move was down. The green bar means that the move was up. And here, this is right now where the straddle is implying, the 3.9%. So this dotted line, that's the average of all the actual moves. So what's the average of all the actual moves? 4.2%. Here we had a max move of 10.5%, probably this one over here. We had some small, almost unchanged, and the median move was 4.2%. So we compare the average to the median to see if there's some kind of a skew for outliers, right? Because the average could get skewed up or down if you have some really big outliers. Here, we could see just the simple returns. If we just averaged out positives and negatives, we see that on average, the returns were 1.1%, which indicates that there were either more positive moves than negative moves, or the magnitude of the magnitude of the moves to the upside exceeded the magnitude of the upside, or a combination of both. But there's a positive or lean, right? Positive skew to the data, right? That the average of all, if we took all the positives and negatives and just averaged them all out, there's a plus 1.1%. With the biggest move to the upside, 10.5%. The biggest move to the downside, negative 8%. And then the median move, if we looked right in the middle, divided all the up moves and down moves, was 2.1%. So this indicates just here that looking at these, especially max moves up and down, that the up moves, right, were greater in magnitude. What about the frequency of the moves? How often did it go up versus go down? You know, is it 50-50, or is there some kind of a skew in the data? So here we see that 56% of the historical earnings reactions, the stock increased, 44% the stock decreased. So this also shows that, you know, Apple's reactions to earnings tended to go up more than down, 56% versus 44%. Now we could narrow down this data again to Q2, because now we're in second quarter, and maybe earnings in the second quarter looked a little bit different than all, you know, the total data combined. So let's narrow it down and see if we could get that perspective. I'm going to come up here. Here are all the quarters here. Let's click on Q2. And now we have a different visual with different stats. And here it's a little bit different. The average move up or down was 3.6%. So it was more muted in the Q2, right? Maybe, and that's why we're seeing this straddle here at 3.9. So here, I'm going to show you again. Here's all of them. If we took all the moves, average 4.2. But if I go on Q2, 3.6. So the stock move seemed more muted in the Q2 earnings. The max move was 8.2. Min move was almost unchanged, with a median move of 4%, which is maybe why this straddle is right at 3.9, because it's right there, you know, inside that data. What about the simple returns? So here we see that on average, there is a gain of 0.9%. We've averaged all these out, with the best move of 8.2% to the upside, worst move 6.3, median move negative 0.2. So here we see a divergence between median and average. And that could indicate that there's an outlier pulling the average up. And what we see here, just looking at the data, you know, we kind of see, you know, magnitude of the moves, but this one sticks out, 8.2. So we could see here that we had this big move to the upside, 8.2%, but we didn't have any moves that quite that large to the downside. So that is pulling up this average. And that's why when we look at it, it seems like without it, you know, without that big move, the averages may have been even negative. You know, if we took this one out and said, well, what if we capped it? You know, it would be negative. So that's something to consider when you're, you know, when you're analyzing this data. What about the frequency of the ups and downs? And here we see a little bit of a different picture as well, that in this case, 40% of the reactions were higher, 60% lower. So now the frequency of the down moves exceeded the frequency of the up moves, and it's a little bit different than the data, all the data combined. Remember, when we looked at all the data for all the quarters, more often the stock went up, but that's not the case for Q2. It's a little bit different here. Don't know if it's tends to be weaker or something going on, but so far that's what the data is indicating. Here, we'll go back to all. And you could see here, 56% versus 44. So the other thing, what do we get from the chart? You know, we have these summary stats, but what else can we glean from the chart? Just looking at it. Well, here we see where the straddle's priced. So we could compare the current price of the straddle to the actual moves, right? To the actual historical moves. And here, that dotted line is the average of all of them, which it's close. The other thing we could see is that the variance in the moves are quite large here. If we just look across the board, we've got high bars, low bars. So that indicates that there's a lot of, we're not seeing exactly 4.2% move every time. That's not what we're seeing. And how do we get to that average? Well, it looks like, you know, there could be a very big variance on the potential moves. Something to keep in mind, you know, where you know, we have moves over here. It looks like, even just eyeballing it, where the stop was almost unchanged, barely moved. Then we had some really high moves here. Also, you know, just eyeballing it, we could look at some trends and patterns as far as the green bars and red bars. You know, is there clustering of good earnings effects and bad earnings effects? And it's not, you know, very obvious, except, you know, I see like a bunch of greens here clustered together, a bunch of reds here. So when you get a big, maybe green, some followed by some small greens, but it's not that obvious. You know, that there's any kind of visual pattern. And what if we just looked at some of the big moves where their big moves followed, you know, by previous big moves? And it's not conclusive there either. You know, I'm just looking, maybe this one here, with the largest one, it was followed by a big one to the downside, not as big. But you got some big moves here followed by down moves. So just eyeballing it, that's also inconclusive from this data set. Okay. So these are like some of the things that we could get just from the visual part of the graph. Now, what if we wanted to use our calculator and to figure out, well, what if the straddle fell down to 2% today? Right? Well, if it fell down to 2%, what this is telling us, percentile rank, that there are only 19% of the time did the stock move by less than 2%. Meaning that 81% of the time, the actual stock move was above 2%. You know, if we're looking for the low, you know, for low ranges, what about if the straddle went up to 5%, right? What if it was to 5%? Let's calculate that. Well, if we took all the actual moves, 64% of the time, the stock moved less than 5%, meaning 36% of the time it moved more. So if we just wanted to keep looking at the high range of straddle versus stock moves, 7%. So once you're getting up to like the 7%, that looks, like we're already at the very high end. 88% of the observations, actual historical moves were below 12% above. So this is how you could use that calculator quickly just to get you that answer without having to, do a count like that. All right. Well, we're right up near the end of the day, so I'm going to stop it right there at 9. We're right.
Well, that was great. We'll have to watch Apple's earnings after the close. With that, Dee, we do have questions for tomorrow's show. I'll send them over.
Okay.
Thanks for joining, everyone. Great job, Dee, as always.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, chameleons. Everyone have a great day. Bye.